Good morning, everybody. It is the 9th of September. We are Signal Centre Talking Ball. I'm Joe, joined by Steve and Taff, and baby Tap Fuma as well. Say hi.
Say hi. Say hi to everyone. Say hi. Shy little fella.
That's okay. Nice to have something
Yeah.
to smile about this morning after
Yeah.
obviously the sad news yesterday
Yeah.
of
Yeah.
Majesty the Queen Elizabeth
Mm,
passing. So
yeah.
a bit of a somber mood around the UK today, and
It is.
yeah, I suspect that'll last for a good couple of weeks yet.
Yeah,
So
maybe two
yeah.
weeks or so. Yeah.
But the show obviously must go on this morning, so we're going to get
Mm,
stuck into the usual bits and pieces that we do. So start off with the headlines, then we'll get into some charts and wrap up the week before the weekend, and then we can yeah, look forward to what's happening in the markets next week. So in terms of the latest headlines, let's do those first as usual.
yeah.
Um, and so the ECB opted for a 75 basis point rate hike yesterday, very much in line with expectations. That takes the overall rate now to 1.25%. There was a minority of investment banks that had expected a 50 basis point hike, and this was the largest rate hike sanctioned by the central bank since inception. Inflation forecasts were increased, with staff projections showing now that 8.1% this year is expected, before a decline to 5.5% in 2023 and then 2.3% in 2024. So based on those projections, it's going to take a significant amount of time before we can get inflation back under control to the target level.
Looks like Joe's
Joe?
gone again.
It's
Yeah, I think he's
frozen.
gone. Yeah, his
Mm,
computer's playing up.
yeah.
Let me just get the rest of the headlines up and run you through them. Wasn't so. It's obviously got a bit emotional for Joe, so he's
Mm,
decided to drop off. Let me see. We are September, and I think he was on to the central bank warning over inflation. According to the ECB, price pressures have continued to strengthen and broaden across the economy, while inflation is liable to climb further in the short term. Powell sticks to the script. Fed Chairman Powell stated that labour market demand is still very high, very strong, and that it's important that inflation expectations remain well anchored. He added that in his view, that we need to act fortnightly and strongly on inflation, while history warns against the premature loosening of policy. He added that he thinks policy action will be able to put growth below trend and get the labour market back in balance. Following Powell's comments, there was a further net shift in expectation, with markets putting the chance of a 75 basis point rate hike at this month's meeting at just over 80%. So looking for higher rates to continue there. Japanese officials stepped up the rate of verbal intervention on Friday, with Bank of Japan Governor Kuroda stating that there had been discussions with Prime Minister Kishida. The rhetoric triggered sharp losses for dollar yen to lows near 142.50, and also helped trigger a wider dollar retreat. That's led to sort of rallies in dollar-based assets, which we're going to jump into in a minute on the technical side. Hawkish Swiss National Bank chair rhetoric from Jordan. He stated that the bank must ensure price stability over the medium term. He added that the Swiss franc rise tend to help rather than hurt, while there was no decision yet on September's policy decision. So, yeah, they've got a different sort of strategy to sort of really look at.
Thanks for
So,
bailing me out there, Steve.
yeah,
Yeah.
I thought
Just
you'd
froze
frozen,
out.
mate. Yeah.
Yeah,
Mm.
having some internet issues for the last couple of days, so apologies for that. But yeah,
I thought the kids had gone back to school and stopped playing with the
uh, it
the
must be the
gaming
dog
machine.
chewing through the cable or something. I don't know.
Yeah,
It's
maybe.
yeah, someone's to blame, I'm sure. Um, yeah, so thank you very much for covering that, Steve. And yeah, interesting stuff going on in the markets over the last 24 hours, particularly from the equity markets, which have rallied quite nicely. And I think that's probably being led by the fact that the US dollar's come off so aggressively. But we'll come on to that in a minute. So, Steve, do you want to kick us off with cryptocurrencies?
Yeah, sure. I'll dive into it. The actually quite interesting moves in the market over the last few hours in cryptos. So definitely something to watch. A little bit of a reminder of what we're looking at. Bitcoin. Bitcoin has posted this, well, probably the lowest we've got since the week of the really aggressive sell-off through support at around about 20,000. The week of 13th of June, we managed to get down to 18,540. So we've got a nice little support area between 17,006 and 18,005. So, and we're bouncing off it nicely. So if you look at the candle itself, the weekly candle, looking pretty positive, looking almost like bullish hammer type. A bullish hammer candle is when you get to the bottom of a range, you see a big spike lower from where it opens near the top of the range, big spike lower, and then it closes above where it opened at the start of the week. So there's good potential for that there. We've still got, you know, a few days to go on the crypto week. It goes on till Sunday, not like our more the normal assets we cover. Looking at the daily chart, we can see we're actually just challenging a decent resistance line, which was previously support from the 26th of July low, where we saw this bullish hammer candle here, which then realized a morning doji morning star formation, where we had a big sell-off, 3 candle formation, big sell-off, bullish hammer, or similar to well, we can call it a star. It's the opposite to a star, and then a nice rally. So are we going to get something similar here? I suppose if we merge a couple of these two candles in between, you could say it's the same sort of pattern, but let's wait and see. We're testing resistance now at 20,700, a break of here, and the next resistance comes in at 21,860, and then above there we got 25,400, and obviously below, as I say, we've got that support level. One of the other interesting ones to watch, we saw a decent uptick in Ethereum. That's getting back close to its key level. This 1730 level, you can see, was really decent support on 5 occasions before, then turned into resistance. Let me get this here and here, and so another retest. And if you also bear in mind, we are getting this rally, and it could be just a dollar-based rally where the dollar's collapsing. So it could be setting us up for a little bit of a trap. So be careful of this. The right shoulder here led to a break of the neckline. However, we are getting an extension now. So this right shoulder might play out. We might, it's more of a complex formation when you get maybe 2 left shoulders, 2 right shoulders, 2 heads, things like that. So definitely a level to watch, 1730 on there. Also, yeah, we could say something, Joe.
Yeah, we've got a request to look at TRB USD Teller. I think it's another well, it is another cryptocurrency. If you wouldn't mind taking a glance at that.
Yeah, sure. Looking at XRP, this is, I'm looking at this quite closely. I need to find out a bit more information about this. This is the one that there's obviously a big court case going on in the US, trying to deem whether this is a security or not. And yeah, this is almost setting itself up for something a little bit more interesting for the upside. So let's take a look at this. We've got the left shoulder here, start of the neckline, the head, and oh, this looks interesting. So I think I mentioned this at the start of the week. Really, the resistance coming in around about 41 cents, support coming in just above the 28.5 cent level. But really interesting, if we do manage to get a break and a close above that 41 cent level, then we should really look at the potential for this inverse head and shoulder, and the measure move target for that, wherever it breaks through, would be around about the 57 to 60 cent level. That would be a retracement of over 50, well, just under 50% on the Fibonacci retracement levels. So yeah, I'm going to keep an eye on that. I don't own any cryptos. I do own one, but I don't think it exists anymore, funny enough. And yeah, I'm sort of like having a look at those, maybe just for, you know, a personal portfolio. Take a look at TRB USD, and looking this on a daily chart, we've seen prices over the last 4 days stall at 1564. So and that's not pretty much in line with a previous swing low that we had after retesting resistance from this original low back from the 12th of May. So let's draw a fib from there to there first. So after we hit the highs around about August, we've seen this really sort of decent sell-off, and we've seen prices stall in front of a 78.6% fib retracement. So that's like an overextension on the move lower. The first price it stalled at was a 61.8, which was 21.60, and we stalled just in front of 78.6, which is around about 15. Is that dollars? Or I think it is. So yeah, yesterday's price action, or today's price action rather, is looking pretty decent. We saw a sell-off on the 6th. We saw a nice like attempt to recover, but that gave up the gains yesterday, and today we've got off to a great start overnight. Obviously, this positive price action in the cryptocurrencies following through onto this as well. Looking from a shorter term basis, I'll tell you what, 4-hour chart looks a little bit more interesting, and for me this is the decent potential for a double bottom on the 4-hour chart. So we've got that there, and we've got the neckline. So we're actually trading at the neckline now. If we can manage to break above there on a 4-hour basis, so this chart is giving me a time frame of 9 o'clock, so we've got another hour. If we manage to close above there, then there is potential for a confirmation of this double bottom, which will then lead to a measured move target of around about 1950. So definitely want to watch. We're seeing these cryptocurrencies now getting to sort of like decent resistance. We saw it on the Bitcoin, saw it on here as well. If we can manage to push through there, then yeah, looks quite promising on that one. Let's take a look at the more traditional assets. We'll take a look at gold. This really should have benefited, and it has done. You can see over the last 12-16 hours we've seen a nice little rally back up to this resistance level. We're getting another retest of the 1726.27 level, and yeah, looking very positive so far. We saw a shooting star the last time we got up here, and then the reversal lower didn't quite manage, probably retraced about 50%, and then it's going again. But the overall idea from this is the potential basically for also the double bottom, which would be a break of this level. That would lend potential for a measured move to let's get it up here, just above, well, just exactly where resistance is, not 1765. So definitely want to watch. If you think this dollar sell-off has got good potential to continue, these are the sort of assets you should be looking at on a short-term basis. Yeah, nice move, nice break of resistance here. Confirmation with a close above that neckline on the 4-hour basis. I think 4-hour chart again. Probably we've got a couple more hours to go. Looks like 10 o'clock really for confirmation on there, and then you can dive in, and you know, obviously it's they're high risk trades, but you know, these sort of formations tend to do pretty well. Silver seems to have already gone again. Very sort of distinctive types of formations forming, even from here. Well, you can sort of like see the sort of the shape, the same sort of shape of an inverse head and shoulders. Let's take it back up there. Yeah, the sell-off, the left shoulder, the rally to the neckline, the second sell-off to the head, up to the neckline, right shoulder, and on. And again, that sort of like measured move on silver would have us looking at this sort of potential, a rally to about 1970. It's nice to get some Fibonacci lines in there. Not far away from the 61.8, which is just a normal correction in markets. So another one to watch. Copper has seen a really good rally over the last few days. Again, if we were maybe sort of like looking at this in a bit more depth, well, No, I don't like that one. Let me get it again. This would be maybe more of a left shoulder here, head. So something like that on copper. Definitely good potential. Resistance coming in at 363. So watch that one. Looking at crude oil now. Crude oil's really on the back foot. Obviously, that's more concerns about the economy and how what's going on a global basis is really impacting on the potential for growth in the economy. It's really slowing down. But also now it's going to benefit from this dollar sell-off. So the last couple of days price action, we saw a really decent sell-off. We saw a bit of a doji candle yesterday, although it's slightly positive. And we're seeing this extension high this morning, so we could sort of like have that morning doji star reversal formation if we do get a nice little close. Resistance really comes in the form of 85.40, which provided support previously. So again, crude oil looks pretty promising on a short-term basis. Let's take a look at the hourly chart. That's a weekly still. Hourly chart. And again, we've sort of like got that double bottom type of formation, triple bottom, inverse head and shoulders. It's the same sort of things we're seeing across the board on the dollar-based assets. Levels to watch in natural gas. Natural gas has had that a decent sell-off from the resistance, but a little bit of a stall coming in now. And again, has this got the potential for creating another head and shoulders formation? But that'll take a little while to play out, looking at really 950 to like 950 to $10 as this sort of like area of resistance that prices need to get through to really sort of like see more upside. But yeah, nice little potential stall in this sell-off. Watching that, but really I'll be watching that for and looking for a place to places to sell into it. So yeah, that covers it from the commodity side, Joe.
Lovely. Okay, let's move on to FX then. And it is, again, all about the dollar. And this time we are seeing a pretty meaty reversal on this one. So we've seen the rally take place over the last few weeks or so. It's come into a big old congestion zone that we have here on the daily chart. First of all, we had this swing high from the 15th of July. Above that, we had a 78.6% fib level, which dates back many, many months, years, in fact, which seems to have done a pretty good job at stalling the upside attempts. So this candle was a little bit of a cause for concern on the 7th of September. We posted a bearish engulfing candle or bearish outside day where prices made new highs but then closed on the lows of the session. What we mentioned yesterday is that we were looking for some sort of confirmation following that candle, ideally some follow through to the downside. We didn't get it yesterday. In fact, we posted a doji candle, as you can see there, on the 8th of September. But as we wake up today, it's very much on the back foot. The dollar index is down by 1% as things stand, and that's a pretty chunky move, certainly something that we haven't seen for a while. So we've broken the short-term uptrend. We've got a really chunky candle as things stand. There's a long way to go in the session. And as we know, and as we've come accustomed to, any kind of dips of this magnitude previously have been bought up quite aggressively, certainly over the last few months. So we can't rule that out. But this does look like it may have some legs to move further to the downside. So we need to keep an eye on this. And obviously, it's going to have an impact on many other currency pairs as well. So in terms of where it could be heading in the short term, I mean, we can draw Fibonacci levels from a number of swing lows. I mean, I think the major one really to consider is from the start of the move down here, and that's 38.2 doesn't come in until around 101.74. So that would be considered a pretty normal correction in the grand schemes of how markets move, and that would be fairly sizable down to there, pretty much into long-term trend support as well. So we need to keep watch of this. It could potentially correct quite aggressively given the opportunity to, but let's not forget the overall trend still remains very positive. So looking at Euro US dollar, that's had a pretty decent bounce as well. We did see prices stalling into this low that we made at around 99.00. We saw a number of doji candles form, highlighting indecision, suggesting that maybe the bulls did have a bit of appetite to maybe speculate on pushing this higher. Overall, the trend still remains very bearish, but we do have some resistance up here at around 102.37, which kind of marries up with this downtrend line. So there is potential there for a move towards this kind of level in the very short term. In the immediate term, we do have some resistance in the form of the high of this candle here from the 26th of August. We're bang into that at the moment. Maybe then what we're forming is some sort of short-term double bottom. And if we can get a close above this resistance level here at 100.90, then maybe we will have formed a short-term double bottom and we can start looking for higher prices in the very short term. And if we were to get a measurement of where the upside would project, based on that, taking a measurement from the low of that move to the neckline, projecting it higher, it comes in at around 103.16, which is also into this cluster of resistance levels here. If we are going super speculative, we can maybe make some suggestions that what we will indeed do is form some sort of bottom pattern along these lines, which would form a really nice bottom and really something that we could all get behind if that were to play out. But it's got a hell of a long way to go before it does that. So I'm just going to delete that off the chart and pretend you never saw it. And obviously, if it does play out, then I'll make clips of this video and we can all see and shout about how good we are. But yeah, in the meantime, let's just focus on the short term. Looking at cable, bounce from 114.10. That was the low that was posted at the height of the pandemic. If we just scroll to the left-hand side there, really good job of doing some of support there. Really nice hammer candle formed on the 7th. Not much in terms of follow through yesterday, but we're seeing that today up by over 1%. Next level on the upside to target is around 117.50. So looks to be on the front foot. How much it's got in it, I'm not sure. I think if you look at sterling against other currencies at the minute, it still looks pretty weak, and we do remain in a very steep downtrend. Let's just take a quick look at some of these other currencies actually in sterling. So sterling CAD, although it's up today, it still looks pretty poor overall. Sterling Swiss, that broke down to new lows yesterday. So we're not seeing sterling strength across the board. This is more being driven by dollar weakness today. Let's take a look at some other bits and pieces linked to the US dollar. Aussie looks quite interesting. That fell following a corrective channel back down towards these lows. Didn't quite make it down to the low that we posted on the 14th of July, but a really strong candle today. And that's pretty much this 50% Fibonacci level, which has done a job now on a couple of occasions. So potential there for a bit more upside in the short term. If we take a look at New Zealand dollar versus the US dollar, we saw prices fall into 60.60. We overshot that a little bit, but it seems to be holding a support and a nice turnaround candle today, up by over 1% as things stand. So we saw the Swiss National Bank talk about hawkish rhetoric yesterday, and that they must ensure price stability over the medium term. He added that the Swiss franc rise tends to help rather than hurt, while there was no decision yet on the September policy. So we've seen some pretty sizable moves here in the Swiss franc, some really strong moves. Obviously, Japanese yen has been very weak anyway, but we've seen a big move to the upside here and trading at new highs. A little bit stalling today, but overall that remains pretty strong. We just saw sterling Swiss, that was making new lows, again highlighting the strength that we're seeing in the Swiss franc. Similar situation with New Zealand dollar versus the Swiss franc. We've broken down through this 59.08 level, which if we go all the way back to the left-hand side, back in August 2020, we can see that that was a pretty significant level, and we've broken through it with relative ease. Just looking at some of the other dollar ones, so dollar Swiss, again, the combination here of dollar weakness and Swiss franc strength. We rallied into this level here around 98.60, and the prices have sold off quite aggressively, and there's no signs immediately of that slowing down. It looks as though we may be headed back to down towards this kind of support zone between 94.72 to 94.95. So I'm going to leave it there on the currencies, and Taff, if you can whiz through some indices for us, that would be brilliant.
Yeah, sure thing. All right. All right. So I'm just going to start off with the with the Aussie 200 here. I just put a multi-time frame analysis scheme here. So I've got all my 4 time frames here: the monthly, the weekly, the daily, and the intraday. So on the start off with the monthly here. I spoke about this yesterday, but we've got, if you can see, price. Okay, let's do this. I don't want to spend too much time on the long time frames. Okay, but okay, there you go. If you can see, price came here and found resistance at this block level here, dropped all the way down. I think this is COVID low. Came up, broke right through, and then came, tested it, went up again, and then now we're broken down again. And we seem to have tested it with this shooting star kind of candle on the monthly. So on the monthly, I'll be quite bearish, looking for continuation of this bearish candle that we had last month, probably targeting this 66.90 area right here. This is on the monthly. And then the weekly, I think, pretty much paints the same picture, that we are in a correction of some sort. Overall, if you can see, this is still pretty much bullish. Like the primary trend is pretty much still bullish. If you just cut through right here, but on the weekly here, we're seeing that we tested this zone here that we saw on the monthly again. It formed a very shooting star candle, and then we dropped down, but then we seem to be correcting from this conversion line right here. We seem to be correcting on the weekly. So if we drop down to the daily and see what exactly is happening on the weekly here, we can get a clear picture of what's happening with this index. And then here we go. So we had this very bullish candle, Mariposa candle, that came on Monday, as a day before yesterday. Actually, it was very full and bullish. It shows that the bulls have really come in and are trying to push the index higher. But I'm looking at the blue level here, this blue zone here, which is your baseline. If you can see here, this is the baseline, and this pretty much equates to, I think it should be like a 50%. If we drop down like here, it should be your 50% retracement for this move right here. So it really lines up with that on the daily. And if we go to the intraday on the 2 hour, and then I've mapped it out, so I just remove this so that it's nice and clear. This is that blue zone that I was talking about. That price seems to be really headed there, but I would look to sell this rally into this resistance here, this 50% retracement level here. I would look to sell the rally into here. So basically, I would look for signs of failure and weakness, and signs to see that the bears have come in. And if we drop from here, then I'm looking to sell from here, and then coming back to test the lows that we had here. So that's on the Aussie 200. Then we go to the DAX. Again, we start off with the monthly. I mapped out this zone here. That price seems to be finding resistance on this zone here, this blue zone here. We had a bearish candle that came here in June, and then the next month we seem to have bounced from there, and then last month in August it was bearish again, but now we seem to be forming a bullish candle. But then we have to wait till the end of the month to really see what's going on here. We could form some sort of W formation here from this, but it's too early for that now. We need to wait till the end of the month. On the weekly, I mentioned this yesterday again. This zone here is our zone of interest. you can see the wicks here. We're just tapping in, and then we're getting a bounce, tapping in and getting a bounce, tapping in and getting a bounce. What's also interesting is okay, maybe I'll draw that on the daily, but we could, looks better on the daily. Okay, we could see some sort of like a descending, yeah, like a descending triangle formation forming here. But for now, we're bouncing off the blue zone, and we're pretty much in a temporary bullish formation on the weekly. We go to the daily. Let's see what happened yesterday. We had this candle here. Price came down, dropped here in this zone. Price came down, dropped in this zone, but it just couldn't maintain. The bears couldn't maintain, and then the bulls picked it up. Although it was a bearish, it was a red candle, but this rejection from the zone here just shows us that probably the bulls have a bit more momentum to take this further up. I'll be looking to cap my gains in this area right here. I'll be looking to cap my gains in this area right here. And if I just drop down on the intraday so that we can really see what's going on, and then I remove the numerous lines to make it a bit clearer. There you go. There you go. So this is the zone that I want to, let me just go like this. Okay. Okay, so this is the zone that I'm seeing price action is playing in, and I'll be looking to really short this, short any weakness that I see coming onto this. So the bulls are coming in, and we seem to have good momentum from this blue zone down here. We seem to have good momentum, but I think it would take a lot for the bulls to continue and just penetrate and continue with the momentum here. So I'd look to short from this level here and play this sort of like rectangle space that we have here. So I'd short from here and then sort of like play it going down on the DAX. So temporarily we're bullish. The momentum is high, but look to short on the 13300 level. And then let's go to the FTSE. Steve said FTSE is always hard to analyze.
Yeah.
Yeah. It's all right. All right, fine. So on the monthly again, last month was a bad month. Price was going down, but then we're capped by this area right here. Price seems to have just found buyers right here. So we're not yet bearish. We're not yet bearish until we get probably a break of this area here. Let's go to the weekly. Right. If you remember yesterday, I spoke about this little territory right here. Yeah, I spoke about this little territory here where I said, look, the weekly candle seemed to have bounced on the SSB. This is just another support and resistance level. Seems to have bounced on the SSB. I can take it down here, right here. Let me remove this so that you can see. So right here, last week we came and then we seem to be bouncing, and then the bears have just come in and they seem to be taking price up on the weekly, and it's looking like the bears are really coming in and trying to push this thing further up, and we're not, the bulls are really coming in and trying to push this thing further up, and we're getting a lot of resistance in terms of the bearish drive down. We go on the, let's go to the daily. Right. I think the daily is more relevant. Right. What happened yesterday? This is what happened yesterday. We had this it's like a bullish hammer candle coming in, and this really showed the impetus that was there. This is pretty much the same with the US indices as well. It shows the impetus that was there, and then the the bulls really came in, and then there was momentum, and we can see a continuation of this momentum coming in here. If you can see on the Ichimoku cloud, every time you have a thin cloud, it really signals that price could easily just penetrate. You know, price likes going in the path of least resistance. So like right here, you can see that this is a twist. We call that a twist in the Ichimoku cloud, and it's easy for price to just penetrate. And this is exactly what's happening now. Price is just going through, and it looks to have good momentum and looks to be penetrating the cloud. I would again go to the 50% retracement of this drive down here, which is the area that we pretty much are in right here. I would go there, go on the intraday. All right, there you go. So this is okay. So the drive from the highs here, right down here. There you go. And then we've got this 50% fib here. So it's outlook for weakness on an intraday level. Probably on the 1 hour, I'd look for a rejection in this zone here, on the backdrop of us still being in that bearish drive. So this would make really a good gun to the head trade, really. You know.
Save it for the end, Taf. Don't give away all your secrets yet.
Yeah. This will really make. But I'll come back to that. But I'm looking to really fade this momentum that we have here on the 50% on the 50% fib. This is on the FTSE.
Cool. Can we just take a look at S&P, Taf, just the one
Okay,
US
yeah,
market
cool.
today, because
Yeah.
we've got a couple of requests on bits that I want to get to as well.
All right, that's cool.
Cheers,
Let's
dude.
go to the S&P. They're pretty much all they're pretty much similar in terms of the structure and form, really. Okay, the S&P, what's significant here on the monthly is this these June lows that every fund manager seems to be talking about, and there's debate that okay, if we break this June low, then really we're really opening ourselves to a really a recession of some sort. But from what price is saying, we seem to be bouncing. We seem to be bouncing, and last month's candle was bearish, but then now we seem to be bouncing, and the bulls seem to be taking it up. Where exactly, we can try and zoom in on the weekly and see where we are. See where we are. I would draw this here. I'll draw this resistance zone here, and this is pretty much your resistance that I think price will find it hard to really go over this here. Okay, make it a bit thicker here. So on the weekly, we had three consecutive weeks of red, and then we seem to be bouncing up. And I'm looking at this blue zone here for any continuation, bearish continuation, really. How does that look on the daily? There you go. Remove the lines, right? So this is my zone, really. This 4100 zone here. This is my zone that I'm looking to make any meaningful shorts on this on the S&P. So I'll wait for price. Momentum was really strong from the 7th here. I think Steve talked about this with this Maribozo candle here, and I think I remember I made a trade on the I made a gun to the head trade here, which I think obviously was stopped out because of this bullish momentum that we have here. So I think for now, if we let price just come up a bit further, 4100 zone in here, if we get some sort of rejection, here, probably on the 4 hour, then I'm looking to short this for continuation of this bearish move here down here. So yeah, I think that's pretty much it on the indices. We are pretty much in a bullish temporary rise, but I don't see that going any further high, and I'm looking to short into those zones that I just outlined, and to short the strength that we have. Yeah, thank you.
Thanks,
Cheers,
Tav.
Tav.
Great job.
Yeah.
So we had a couple of requests on the stream, and
I've got them all lined up, Joe, if you wanted to just run through them.
I had them lined up too. So
Go on, let's see what you've got to say, because I've sort of like made my decision already.
right,
And
okay.
obviously they've got one thing in common as well.
Food.
Yeah, takeaway food or delivery food. So
Yes.
I'm just hoping that someone's not thinking, are we heading for another lockdown?
Yeah, maybe.
I
So
don't know.
I mean, obviously during the lockdown, these stocks did very well because people, couldn't go out and they're ordering food. But since then, it's been very rough for this sector. If we look at Deliveroo here, we can see a really aggressive downtrend. And in recent months, price has started to maybe level out a little bit. It's still posting a sequence of lower highs and lower lows, which obviously is a concern and really just validates that we are in a downtrend. But there maybe are some signs of positivity that we can look at here. It is trading in this range as we see. So ideally, we'd be looking for a move up to the upper end of this bearish channel, or where we've highlighted this horizontal resistance at 101.4. So really, before I get any sort of excitement about a stock like this, I need to see a pretty significant break to the upside, and it needs to take out these previous highs here. So for now, I am still watching and waiting on something like this. If you were to play a move to the upper end of the range, then the risk reward isn't particularly great at the moment. So you need to factor that in if you're going to speculate on a stock like this. If we're looking for a move from where we are at the minute, which is kind of mid-range, towards the upper end of this range, then we're only looking at about a 1.1 risk reward ratio if we were to have a pretty tight stop below the recent low. So for me, we need to see a break of 101.40 before we can get excited about that. The other stocks was Takeaway, which is Just Eat. Again, big downtrend, but maybe some more signs of positivity here. Price is starting to level out a little bit. We saw a big shoot to the upside here on the 19th of August, a big gap on the charts, which was then subsequently filled. And we've pulled back to a 78.6% Fibonacci retracement level from this swing move here, which is an interesting sign. It seems to have attracted some bullish interest, but also what you may be able to make out is maybe some form of inverse head and shoulders. It is very speculative at this point because we need these patterns to break before we can actually confirm them as being that. And in order to do that, we need to see this previous high from the 19th of August taken out, which comes in at 24.18. If it does do that, then it looks like a spectacular inverse head and shoulders, a nice upward sloping one as well, which is one that we can really get behind if it does break. And in terms of where we expect prices to move on the upside, we can take a measurement from the low to the neckline, project it higher, and we'd be looking for a move to around 35.27. So if you were feeling bullish and you did want to speculate on this pattern eventually completing, and you wanted to target a move all the way up here, the risk reward on this at the minute is pretty special indeed. But obviously the chances of it paying out, due to the fact that it is still in a long-term downtrend, are quite low. But if it does work out, you may be looking at almost 9-to-1 risk reward ratio on that if you target the first mission move. So yeah, looking a little bit more interesting, but still plenty of work to do. I think it's a similar situation on Delivery Hero. We've seen this attempt to kind of base out for a number of months now, really going back to February. Again, overall, the overall trend remains bearish. We do have now a resistance at 56.93 or 57.16, a couple of levels there maybe to watch. We were trading in a bearish channel on this, and we've broken out of that quite nicely with a gap to the upside. So that is offering some encouragement. And the next target would be a move up to this resistance here. But again, maybe we have the potential here for an inverse head and shoulders. needs to do a little bit more to complete the pattern. So still very speculative at this stage. Assuming this is the low of the right shoulder. A break above 57.16 for me is required in order for that to start moving higher. And if we do a measured move on this, again, taking that measurement from the low to the potential neckline that we've highlighted, project that higher, we're looking for a move all the way up to 90.45. And if you were to buy that now, and speculate on a move towards that level and have a stop below what we are assuming is going to be the right shoulder, then you're looking at about a 5-to-1 risk reward ratio on that. But really, from a technical perspective, you'd want to see the break of the neckline before you backed that pattern to give you that additional confirmation. Hopefully you was going to say something similar, Steve.
I love the way you've picked up the head and shoulder, inverse head and shoulders. Overall, the sort of like, as you said, the chances of this like playing out, this pattern playing out, are quite small because it's obviously early days in the patterns. And if you sort of think about what's going on in the market at the moment, you've seen the dollar sell off. You've seen like indices have like really picked up, so that you get that bullish momentum to the upside, which we're seeing in these types of stocks. But I suppose if you think about the economy as a whole, with sort of the energy crisis going on, people are looking at ways of really sort of saving their pennies, and maybe that sort of takeaways get impacted in that way because people have to pay their energy bills. Although, and also the takeaways themselves, are they going to go up in price? Because
Well, they already are.
Yeah.
They really are. If you look at it's not cheap to get a takeaway anymore.
No.
Well, never really has been. It's always been a bit of a luxury. But yeah, I mean, sensible hat on. Obviously, we're looking at the charts here, and just on a standalone basis on the charts, there are maybe some signs of positivity here, but it's very early stages. But thinking of this realistically from an economic point of view, are people going to have money in their pockets with the winter coming up and energy prices going through the roof to be able to buy takeaways on a regular basis? I don't know.
Yeah. I think it's more about sort of like looking at ways of trying to make those pennies stretch. Also, the actual takeaway companies, the restaurants, you're seeing a lot of them closing down at the moment because they're being hit with these energy bills, which are astronomical. I saw one the other week. Last year paid $2,600 for their energy. Their quote now, or it's a 22-seater restaurant. It was like a tiny restaurant, but their estimate now is something around about £20,000 for the year, which is something they just can't afford. So you've seen a lot of these places that provide, the food services are struggling as well. It's not just the energy crisis at home. It's the restaurants and takeaway outlets are feeling it.
And buying the food in the first place is costing them more.
Yeah.
The actual
Everything,
raw material of what it is that they're doing, and then obviously paying the staff to then do it. It's a mess.
The knock-on effect.
Yeah. Okay. One more thing I just wanted to bring up quickly. One of our team pointed it out yesterday on Twitter from Sentiment Trader on Twitter, talking about this chart here, which is the amount of institutions effectively hedging exposure, and they do that in the form of put options. And in 22 years of this guy doing this, he said this chart stands out more so than any other that he's seen of late. Last week, institutional traders bought $8.1 billion worth of put options. So put options are effectively a bet on markets going down, and often used to protect portfolios in the form of hedging. They bought less than 1 billion in calls. So call options are expecting prices to rise, and this is 3 times more extreme than what we saw in 2008. So although we're starting to see markets rally a little bit, I think we need to take things like this in mind, because if the smart money, if you like, institutional traders are behaving in this kind of way, that suggests that they are preparing maybe for something quite awful, really, going forward. So try and use these other points of view and understanding of what the big institutions are doing when factoring in your own sort of investment strategy.
Yeah, it's definitely something that we are quite in touch with our parent company Acuity, providing you sentiment analysis and looking at, I'm looking at alternative data sets myself next week with the STA. There's a webinar. We'll share the link next week. And yeah, it's technical analysis is one thing. There's other analysis out there which I think, when you combine them, they can be a lot more a lot stronger tool in a trader's toolbox. So things to watch like that are, for me, that is frightening. Obviously we can't verify the data, but that looks one of the scariest things I've seen.
Anyway, let's move on to the gun to the head challenge. So this is where the three of us, or four of us when Jamie's here as well, pick trade ideas live on the stream in the hope that they work out between now and 9 o'clock UK time this evening. Each of the ideas must have stops and targets. They're all published directly to our TradingView profile. So if anybody wants to check them out, please feel free to do so. You'll find them under the ideas tab at signal_center. Yesterday we did 3 trades. Steve was selling gold. And I believe you were slightly on side with that yesterday. Let's just have a quick check. Yes, I know you weren't. You were stopped out. Sorry, Steve.
What?
Sorry.
That's Jamie,
No,
mate. That's
Jamie. Jamie was
Yeah.
stopped out. Sorry,
Get out
Steve.
of it. Yeah,
Steve
I
was
know.
buying copper. Yes, wise old Steve. He knew what he was doing.
Wow,
Yeah,
wow,
Look
exactly.
at that.
That's a good
Copper.
run.
Yeah,
Call a
That's a
copper.
good run. Mm.
Sorry, I did that to you, Steve. Yeah,
Yeah.
lovely win on there on copper for you. So well done. I was selling the top of the range on the DAX. Looked like it was working out perfectly at one stage in the session. Obviously, a volatile one yesterday with the ECB. Managed to hold on to some profits at the 9 o'clock close, but at one stage I was thinking, when I was getting ready to
It
go down
looked
the
like
pub
it.
to celebrate.
You were counting your chickens, mate. You were on your
I
way
was.
down to Kentucky, weren't you?
I was. Taff, you placed a trade yesterday. It's not on this profile, it's on another one, but it was. Can you remind me?
I think it was S&P, and I think
S&P.
I got stopped out. Yeah, it
Yeah,
was
that was
S&P.
right.
I got stopped
Yeah,
out on that one.
never
I was
mind.
shorting it.
Okay,
Yeah,
buddy. You can go first, Taff. I think you
share your
All
screen
right.
for us.
shoot off.
All right, cool. I'll share my screen. All right, so I'm going to go for the FTSE one that I talked about, eh? So I'm just going to short this momentum here right into this space here. So I'm looking at 7352 as a sell limit, and then my stop is just slightly over this little peak that we had here at 7396, and then I'm looking at just retreating to 7227. Might not come all the way down here, but I'm really looking for a reaction here in this zone here. I was just about to say it's funny that the viewers requested for Deliveroo. I last week on Friday I looked at this wedge formation here, and I
Nice.
put this here on my personal trading view, and it's playing out pretty well. But I'm just targeting this 100 zone here. I don't think it can go any further than that. Really.
Taff, was that you who requested to look at delivery because you wanted to show this off?
Caught red-handed. Taff, on the FTSE trade, we've got to enter at market. You're sort of entering a little bit higher, I think.
Oh,
okay,
right? Okay.
Yeah. So you got to move that down to where the price is trading now.
Okay, cool. I'll put it here. That's gonna mess up my risk to reward, but
got to bring the stop lower.
And then I'll bring the stop here.
That's it. Just, as long as it's above 2, cool. Ideally you'd sell it a little bit higher. We understand that we have this most days. It's quite annoying having to dive in, but that's the name of the game.
For the cool. So gun to the head. All right, gents. I
Cheers,
need to. Cool, man.
Yeah, thanks, Taff. We'll speak to you soon.
Cheers.
Steve, you got one ready?
No, because
Okay.
you know what? I've sort of become a bit engrossed in the show, and I've sort of I had one when I was going through the markets. I've completely forgotten what it was now. I think it was continuation higher in crude oil. Yeah, that's what I'm going to go for. But if you're ready, you go.
Yeah, I'll go for this. So this is New Zealand dollar versus the Swiss franc. So we talked about Swiss franc really strengthening. New Zealand dollar doesn't look too great against it. We saw a fairly decent breakdown yesterday on the daily chart. If we zoom in here, we can see it's had a little bit of a move to the upside, but seems to have failed at an attempt at resistance. So if we look at the intraday charts, just bring up the hourly here. We've got a close below the 10-period exponential moving average, which for me is always a nice little trigger if you're looking at intraday trades. So let's go with this, shall we? Let's sell it at the current price, which is 58.76. Pretty tight stop loss above the highs that we've posted over the last couple of hours, so only 20 ticks. And that's at 58.70. And then obviously I need to start looking at a target for this, and there isn't really much to reference on that chart. So let me just have a quick flick back to the daily to see if there's anything there that I can look for on the left-hand side. May have to employ some Fibonacci levels here from the lows of the pandemic to the highs, and hoping that I'm going to get a 61 or a 78.6 target. I don't like the fact that it's into the 61.8, but I've made my bed now.
It's through it now, mate. It's through it. It's going.
Better
It's like
line
broken.
it. Let's go for that, shall we? 57, 56. So 57, 57, 56 gives me a 5.87 risk reward ratio on that today. Highly speculative, of course, as all these trades are, but you've got to be in it to win it. So let's see if there is more strength in the Swiss franc today. That is my gun to the head idea for now. Over to you, Steve.
Okay, let me just get my chart back up. I'm going for crude oil. I've battled with crude oil this week, got caught out a couple of times. However, it seems to have stalled on the daily basis. Is obviously I need dollar weakness to continue, but we got this like doji type, almost inverted hammer type candle, and this nice reaction that we're seeing overnight. And I'm breaking it down to, if we look at the 4-hour chart, we've seen a nice break of the resistance from yesterday's 3 o'clock candle. So that's broken up, looking pretty strong at the moment. This is WTI crude oil, and I'm going to take it from here. We can say it's an inverse head and shoulders. We can say it's like maybe a double bottom, you could call it, but not really. It's not really a great. This is more of an instinctive trade rather than a real decent technical trade. So really high risk reward on here. Looking at the stop, needs to be around about the $82 level. That's sort of like not really giving me a great deal, and we're going to target a move up towards sort of $90 level. So yeah, let's get a 2.5 to 1 risk reward on here. The stop is just sort of around about where this swing low occurred. So that's what I'm going to go for on the trade idea. I'm going to buy WTI crude oil at 84.16, which is trading at now, targeting a move to 89.16, $5 move. For that to happen in such a short space of time is pretty improbable, but I think that there's potential to capture some upside in it. Stop is at 82.16, so a $2 stop. Normally I like to have, with crude oil and oil, I like to have like a $20, $50 stop. So this is a bit bigger stop than normal. But yeah, giving it a little bit of room because we've just broken through that resistance. So yeah, that's the trade idea I'm going to post today.
I'll get mine posted up shortly as well. So we can wrap it up now just with the stuff from the day ahead. So there's only the Canadian employment report today of high impact. So I've lost the stream, the presentation. See if I can bring that up quickly, because there are a couple of bits and pieces we need to be aware of next week. Let's just bring that up.
I've lost the presentation as well.
Never mind. Okay, yeah, Canadian employment report 1:30 today. Next week we've got US consumer prices and UK consumer prices, so it will be a really important week for inflation numbers. And then we've got the Bank of England monetary policy decision on the 15th, so expecting to see further guidance from the BOE with regards to monetary policy. Obviously expecting them to raise rates and continue along that path. So yeah, it could be an interesting week yet again next week. I'm not around next week, and neither is Jamie, so it'll be Steve and Taff holding the fort. Is Tibor going to join us as well?
Yeah, I'd like to get Tibor involved. We'll sort of and we'll have a chat with that and maybe get him in on Tuesday onwards or something. Yeah, so one of our other analysts that we has been working for us for a couple of years now. So and he's a phenomenal analyst. So we'll get him on next week. I'll get some cavalry on board, and you never know, you may not have a job to come back to, Joe.
Well, I'll just stay in Bangkok then, shall I?
Well, I don't know. Your missus will decide that for you.
Yeah. Fair enough. Okay, let's wrap it up there then. Thanks for watching, everybody. Have a great weekend, and we will see you again next
That
week.
was a long show, Joe. That was an hour and 5 minutes.
I know. Let's wrap it up now then, eh?
All
See
right.
ya.
Cheers.
Bye.
Cheers.